your one-stop shop for all things related to digital assets, cryptocurrency, and finance. We're getting into something that will really change the cryptocurrency landscape, especially for XRP, Stellar, XLM, and Algorand, which is why I'm so thrilled you're here today. You are aware that these assets are more than simply coins if you have been following this space. In Europe, they are emerging as the foundation of a new financial ecosystem, and every cryptocurrency fan and investor should have a thorough understanding of it. Therefore, stay with me while we go over everything in detail. By the time this is all over, you'll understand exactly what's going on, how it relates, and why it's important for XRP holders. Let's begin with the main concept. On a single programmable platform, Europe is creating what is referred to as a European ledger, a next-generation financial system that includes tokenized forms of commercial bank money, central bank money, and other digital assets. Imagine it as a significant update to the well-known old systems, such as T2S, which are target two securities and develop into an entirely DLT-based infrastructure. The underlying blockchain-like technology that enables safe, quick, and programmable transactions between institutions is called distributed ledger technology, or DLT. To put it simply, market participants supply the transactions, the trains that travel on the rails, while central banks supply the platform, the rails. Now, why is this important for Algorand, Stellar, and XRP? Each of these networks, however, has special advantages that make them ideal for certain components of this new system. For example, XRP is designed to bridge between various currencies and ledgers and facilitate fast cross-border transactions. Stellar facilitates quick peer-to-peer payments and is more retail-focused. Algorand is renowned for its scalability and smart contract capabilities. When combined, they provide a flexible toolkit for the impending financial transformation in Europe. Let's give it some specificity. Consider attempting to sell a tokenized asset on Algorand that relies on a conventional banking system, such as TIPS, Trans-European Instant Payment System, for cash payments. A smart contract used by the DLT network simultaneously locks the cash and the asset. Both legs are released simultaneously after all requirements have been satisfied. This guarantees security, speed, and dependability across several ledgers and is known as atomic delivery versus payment, or DVP. In these circumstances, XRP can serve as a bridge asset, bridging disparate systems and providing immediate liquidity where it's required. This is where things start to become very interesting, though. The company that created XRP, Ripple, has been discreetly forming alliances with significant banks and financial organizations worldwide. XRP is already firmly ingrained in the financial system, as seen by the Bank of England's experimentation with Ripple's technology for synchronized currency settlements, Standard Chartered's strategic investment in Ripple, and HSBC's collaboration on tokenized securities. To put it another way, banks and governments were covertly implementing XRP's technology to create the payments of the future, even though many critics were labeling it a hoax years ago, and this is only the start. With stablecoins on the XRP ledger, digital currency initiatives sponsored by the euro, and international payment networks built to transfer value as quickly and effectively as information does today, Ripple's ecosystem is growing. This is real. It's not just theory. Additionally, one of the first significant public demonstrations of this new financial architecture will be the unified DLT system in Europe. This could result in greater usefulness, acceptance, and recognition for XRP holders as a vital instrument in the global digital banking system, where we make difficult crypto and financial concepts easier for you to understand. The technological aspects of Europe's new financial system and the roles played by XRP, Stellar, and Algorand will be covered in more detail in this section. If Part 1 provided you with a broad overview, we will now begin to connect the dots so you can comprehend the specifics of how these assets are connected and why this is important for future adoption. First, let's look at the actual European ledger. Europe is developing T2S, or Target 2 securities, into a complete DLT-based single market infrastructure, as was previously mentioned. The objective is to enable the coexistence of tokenized digital assets, commercial bank currency, and central bank currency on a programmable platform. To put it simply, picture a system that can easily manage both conventional bank currency and digital currencies based on blockchain technology. This is significant because it enables direct communication between banks, organizations, and even retail systems without the need for cumbersome middlemen. Now, What role do Algorand, Stellar, and XRP play in this? These ledgers are all capable of tokenization and smart contracts. For instance, Algorand enables organizations to manage tokenized assets with fast smart contracts like as bonds, securities, or stablecoins. Stellar, on the other hand, can manage quick consumer-level transactions because it is particularly designed for retail payments and e-money tokens. Ripple created XRP with the express purpose of facilitating high-volume international payments and connecting ledgers and currencies. Because of this, XRP can act as a glue between disparate ledgers while transferring money quickly and effectively. Here's a real-world example. Let's say a buyer wishes to pay using cash using tips or another conventional banking system, and the seller has a tokenized asset on Algorand. Typically, this would necessitate several processes in ledger reconciliation. However, in a cross-ledger DVP, delivery versus payment, a smart contract simultaneously locks the cash and the tokenized asset. When all requirements are satisfied, the buyer receives the asset and the seller instantly receives the money. In these circumstances, XRP can serve as the bridge asset, guaranteeing liquidity and prompt ledger settlement. Programmable interfaces and APIs make the technological integration easier. These various ledgers can communicate with one another without human involvement thanks to APIs. For instance, tokenized euro payments or e-money transfers can be made possible by programming EURD, a regulated digital euro, to communicate with Stellar and Algorand. In this configuration, the DLT layer manages the assets, while the classic banking system keeps the cash settlement rails. Blockchain-based and conventional banking may interact seamlessly thanks to this two-layer approach without sacrificing speed, security, or compliance. This model is already being tested by banks. Using Ripple Connect and the Interledger protocol, the Bank of England carried out a proof of concept using Ripple's technology to synchronize two currencies across several real-time gross settlement systems. The experiment showed how XRP can increase cross-border payment speed and efficiency while lowering settlement risk. This demonstrates that XRP and Ripple are more than just theoretical instruments. To address practical issues, they are being aggressively included into significant financial systems. Large organizations are also investing strategically in XRP and Ripple. For instance, the fifth biggest bank in the UK, Standard Chartered, made a direct investment in Ripple. Their objective is to more effectively link corporate communities and digitize financial activities. In a similar vein, HSBC managed tokenized assets by collaborating with Ripple-owned technology. These collaborations demonstrate the increasing confidence in Ripple's technology and establish XRP as a key component of Europe's digital financial future. The Trigger Hashlink protocol is one of this system's most important technical components. This makes it possible to lock cash on one ledger, like tips, and assets on another, like Algorand or Stellar, at the same time. Both legs release simultaneously when certain requirements are satisfied. This guarantees atomic settlement, which eliminates the possibility that one side may receive their money or asset while the other does not. By connecting disparate ledgers and supplying liquidity where required, XRP can help to make the settlement process seamless and immediate. The ecosystem of Ripple is not limited to Europe. Cassie Craddock, managing director for the UK and Europe at Ripple, revealed that the euro-backed stable currency is one of the stablecoins that use the XRP ledger. Ripple establishes a full-stack digital financial infrastructure from custody and payment to tokenization and settlement by enabling banks to issue stablecoins backed by the euro on the XRP ledger. XRP holders should take note of this. XRP is more than simply a coin for speculation. It is a crucial piece of infrastructure that will support international finance in the future. Additionally, the XRP ledger is perfect for cross-border settlements because to its high throughput, speed, and efficiency. International transactions might take hours or days to settle in traditional financial systems. That is lowered to seconds by XRP and Ripple's network, allowing banks and other organizations to transfer liquidity quickly. In FX markets, where speed and dependability may reduce risk exposure and settlement costs by billions, this is especially crucial. In conclusion, the European ledger is a dual-layered, programmable system that links conventional bank currency with DLT-based assets. Each of XRP, Stellar, and Algorand has a specific function. XRP serves as the fast bridge for cross-ledger settlement and liquidity, Stellar for retail payments, and Algorand for tokenized assets and smart contracts. These technologies are already being tested by major banks and central institutions, with XRP at the heart of many of these initiatives. This is a pivotal time that could determine the future uptake and worth of these digital assets for anyone who owns XRP or is interested in the Ripple ecosystem. Algorand and Stellar are positioned to have important roles. This section will concentrate on real-world adoption, the expanding alliances with significant financial institutions, and the reasons that make XRP a crucial component of the changing global financial scene. First, let's talk about Ripple's strategic alliances. Ripple has been subtly establishing connections with some of the most significant banks and financial organizations in the world over the last few years. To investigate currency settlements across several real-time gross settlement systems, for example, the Bank of England carried out a proof of concept utilizing Ripple's technology. This experiment showed that settlement risk can be decreased and improve the effectiveness and speed of international payments. Although XRP was initially viewed with skepticism by many, banks were actively testing and applying the underlying technology to address practical issues. The fifth biggest bank in the UK, Standard Chartered, is among the most prominent instances. They obtained a seat on Ripple's observer board and made a calculated investment in the company. The bank claims that digitization is a high priority in order to promote investment, trade, and commerce. By utilizing tokenized assets and rapid settlement processes, Ripple's technology makes it possible for standard contracts to connect corporate groups more effectively. XRP's participation in these networks is crucial because this is not merely theoretical. It is currently being put into practice. Another significant participant is HSBC, which has teamed together with technology owned by Ripple to create a tokenized securities custody platform. HSBC can improve the efficiency of tokenized asset management by incorporating Ripple's infrastructure, delivering speed and security. The noteworthy aspect of this situation is that these sizable, well-established financial institutions are not conducting experiments out of curiosity. They are aggressively transforming conventional financial procedures with the use of XRP's technology. Additionally, this trend is only getting faster. Let's now discuss stable coins, which play a significant role in Ripple's approach. Cassie Craddock, Managing Director for the UK and Europe at Ripple, has stated that the company is actively introducing stable coins backed by euros on the XRP ledger. Banks and other financial organizations may carry out digital transactions while adhering to regulations thanks to these stablecoins. For instance, a French bank may create a euro stablecoin on the XRP ledger to facilitate cross-border payments and settlement. This gives XRP even more practical use by bridging the gap between blockchain-based finance and conventional fiat. XRP is especially well suited for these use cases because of its speed, scalability, and cross-border liquidity. XRP was created with institutional use in mind, in contrast to many other cryptocurrencies. With incredibly cheap rates, the network can handle thousands of transactions per second. For this reason, governments, major financial organizations, and central banks are investigating its possibilities for both domestic and global payment systems. In Europe, Ripple isn't stopping. They have collaborations and initiatives in several countries, such as the United States, Singapore, Japan, and the United Kingdom. The business is developing international stablecoins, such as possible tokens backed by the euro and Japanese yen. The CEO of Ripple, Brad Garlinghouse, has emphasized that these projects are a part of a broader RippleNet ecosystem that links digital currencies, tokenized assets, and payments worldwide. This is crucial for XRP holders since it increases the network's acceptance and importance, which in turn boosts XRP's usefulness. The FX market also exhibits the expected ripple effect. The UK handles about half of the world's foreign exchange activity, and Ripple's technology is now in a position to be crucial to the digital settlement of these transactions. XRP helps banks save time and money by offering rapid liquidity and bridging currencies across numerous ledgers. Because of this, XRP is now a vital component of the global financial system's infrastructure, rather than merely a digital asset for speculation. Understanding Ripple's Internet of Value vision is also essential. Ripple's strategy is independent of legacy systems and centralized data centers, in contrast to conventional payment networks. It operates more like the Internet, where information flows as swiftly and effectively as value. Because banks and payment providers are connected to RippleNet, they are able to provide their customers, whether small enterprises, individuals, or major corporations, with greater services. The RippleNet Committee oversees governance, guaranteeing everyone's compliance and clear regulations. Significantly, the worldwide financial messaging standard ISO 2022 is supported by Ripple's ecosystem. This guarantees complete compatibility of XRP and its related networks with current and upcoming banking infrastructure. Ripple is developing a strong end-to-end solution for international finance by integrating ISO standards, smart contracts, and stable currency on the XRP ledger. The role of developers should not be overlooked. Financial institutions can use the XRP ledger, Stellar, or Algorand to develop their own apps and tokenized assets thanks to the ecosystem that Ripple has established. This innovation layer guarantees that Ripple's infrastructure may be expanded to accommodate new use cases such as tokenized bonds, money market funds, or payments. This indicates that XRP's value goes beyond conjecture for investors and cryptocurrency enthusiasts. The new financial system is powered by this vital utility asset. At last, the worldwide approach is visible. Despite having its headquarters in the US, Ripple is well established throughout the UK, Europe, and Asia. Ripple makes sure that XRP is in a position to become the main bridge asset for digital currency, cross-border payments, and stablecoins globally by constructing bridges across continents. The next few years may see a revolution in institutional adoption and XRP's price utility as a result of the adoption of XRP and Ripple Net solutions by significant financial centers. We'll look at how the European DLT infrastructure will affect things in the future and why XRP is in a unique position to rule cross-border banking in the years to come. Let's begin with the vision of Europe. The goal is to develop T2S and Target 2 securities into a unified market infrastructure that is entirely DLT-based. Tokenized digital assets, commercial bank currency, and central bank currency would all coexist on this programmable platform. In essence, Europe wants to combine blockchain technology with traditional finance, which may significantly increase transaction speed, lower costs, and improve transparency. This is the best-case scenario for XRP since its ledger is already built to manage low-cost, high-throughput, cross-border transactions, which is exactly in line with Europe's digital vision. Cross-ledger interoperability is a crucial component of this future architecture. Consider a situation where a tokenized securities on Algorand must settle in euros on a conventional banking system such as TIPS. The asset and cash can be locked on different ledgers at the same time using a trigger hash link protocol. Both legs of the transaction release simultaneously if requirements are satisfied. Because neither party is exposed to risk thanks to this atomic settlement, cross-ledger transactions are quicker and more safe. As a bridge asset that connects ledgers and rapidly provides liquidity, XRP is ideal for widespread adoption by banks and other financial institutions. The increasing significance of stable currency is another significant implication. Stablecoins backed by euros are already being introduced by Ripple on the XRP ledger. These virtual currencies enable institutions and banks to